My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today, zooming in from New Jersey, we've got a past guest of the show, Irwin Boris, and Irwin is very experienced in real estate investing and syndications. And these days, since the last time we talked, he's found that investors have kind of changed their focus, and what used to be important is no longer as important. What wasn't important in the past is even more important, and we're going to dive into the details. So Irwin, welcome back. Good to have you again, my friend.
Thank you so much, Dave. I'm happy to be back.
So Irwin, give us a snapshot. What are you guys investing in these days? What is the asset class of preference?
You know, we're looking for deals where we could generate at least 8 or 9% positive cash flow in the first year. So we're not looking at extreme value adds. We're not buying institutional grade. We're buying a lot of B-class assets and primary and some secondary markets. And they're probably in everybody's backyard. You've driven by, shallow bay flex and smaller industrial buildings are in everybody's neighborhood. A lot of them in my own backyard in my neighborhood. And I never, I always took them for granted.
So for people who aren't super familiar with them, what is that? What does that mean?
Sure. A small bay or a shallow bay industrial building would have some of your local vendors. You might have the guy that repairs vacuum cleaners. You might have a carpentry shop in there. Some might have an auto body guy who does custom detailing or installs custom car stereos. The plumber, the painter needs a place to do his little bit of office paperwork and keep his painting supplies and maybe park his truck inside or next to the building. And then there's also a lot of older industrial where you might have guys that buy and distribute. Amazon is an extreme, but think about the local soda distributor. Like we all used to remember years ago when we were kids, we got the seltzer bottles. Remember those?
Yeah.
And they had to come from a warehouse. So the bottler dropped them off at the distributor. The distributor loaded them onto their trucks and delivered them to your home. And they're in everybody's neighborhood. They're not on the main path. They're somewhere off the beaten path. But if you really look around, they're there. We like ones that are probably 80 to 100,000 square feet per acquisition. So it might be a small park. It might be a group of buildings. And you're really looking for something that has multiple tenants. Because in a perfect world, if you could buy 100,000 feet that has 10 tenants or 15 tenants, it's almost like the multifamily of the industrial world. It's the same kind of thing. And we like this asset class because they don't move as much as people in apartments.
Much longer. Because this is the painter or the plumbers. This is their livelihood. They need that roof over their truck and over their office.
Yeah, and people know where they are. So for them to move, people have to find them again. And I also like this asset class because most of the leases are triple net leases where as owners and investors, we're not exposed to the operating expenses.
Yeah.
Unlike apartments, like I have one apartment investment I'm in, and the last couple of years, the insurance went from $275 per apartment to $900 per apartment.
Wow.
So thank God it's come in a little bit, but still, with all the storms and the weather, it's not really desirable anymore.
Yeah. So in these cases, it's up to the tenant to cover their own insurance. That sort of thing.
No, that's correct. They cover their own interior insurance, plus they also reimburse for the landlord's insurance.
Yeah.
So it's really a win-win. It's really all about cash flow, which is what we look for.
All right, so we got a good overview of what the asset class is. We were talking a little bit off camera that you've noticed a shift over the last year or so in what a lot of investors are looking for. Can you kind of compare and contrast what it used to be and what you're seeing it to be these days?
Yes. Over the last couple of years, even before that, even when I started out in this business, everybody was always looking at a pro forma internal rate of return, an IRR or an equity multiple, and how, when they're going to double or triple their money over a period of time. Now I find that, some deals generate a lot of cash flow. So it might only be a 15 or an 18 IRR, but if you're getting 10 or 12% current, that's a lot more attractive, especially in where we are right now in this economy. with tariffs and people, with uncertainty about interest rates, people would like to know that it's almost like a coupon, that it's going to come in, and at some point you can potentially refinance, pull a little bit of cash out, do something else with that money, and continue to hold it. So we're seeing a lot more people looking for stability in their income, whether it's doctors or dentists, or even some family offices are writing some large checks because they need certainty of the current cash flow, and this provides it to them. And as somebody who manages this, that's why we invest in the asset class. We've had assets for 30 years. We continue to refinance them. And once you get in the deal and you like it, really, why do you want to sell it?
Yeah.
So we're being
well, that's what always didn't make sense to me, is so many syndicators, in the past, it was all about it was speculative. It is really what it was. It was all about buy it at today's price. Things are going crazy. Hopefully we can, maybe we fix it up a little bit. Maybe we increase the rents, whatever. But a lot of it was like just market hype. And hopefully in 3, 4, 5 years, we can sell this, double, triple, quadruple everybody's money, but zero cash flow in the meantime. You're seeing
That's
something
correct.
Completely different now.
We're seeing something completely different. And, for the traditional syndicator that you talk about, they would short to hold if they thought their profit sharing was going to decrease. Here, because the longer you hold an asset, the more dilutive it is to the syndicator, where we're investing really for the cash flow and to make friends and to bring people along with us. So we're happy to hold it for as long as everybody else wants to hold it. We recently had the opportunity to sell one asset, and everybody said to me, "Why?"
Yeah.
We got term left on. We have 3.5 years left on the mortgage. Why sell it? We'll just refinance later. And I'm like, okay, good answer. I'm not going to argue with them because I was kind of hoping they would say that. And so it's really a big switch where everybody was always chasing how they're going to double the money, how they're going to get rich. Now people that have been investing, especially people that have been investing for a while, or people that have real estate as sort of an allocation of what they do, now that it's all about the cash flow, because cash flow is how you pay your bills, it's how you live. And they'd rather know that, that 10 or 11% is going to increase over time as the rent increases.
Yeah, that makes a lot of sense. So, Irwin, in today's environment, what's the most challenging part for you? Is it finding properties that pencil out, or is it finding investors? What are you finding these days?
Well, investors, some of them are still licking their wounds from apartment deals.
Yeah.
And I think, especially in office deals, and there's like walls of loan maturities. And I see a lot of these new preferred equity or mezzanine funds that are trying to get their money out to these people that need to refinance. And so I think that some investors are sitting on the sidelines, but I find out since after the election, there's all of a sudden there's a lot more investors who say, you know what, we know who the president is, we know he's a businessman, we know he likes real estate, and so I find a lot more people in the market, but they're also looking for the cash flow, because if you have cash flow, you're not worried about that crazy value add strategy where you might not be able to pay your mortgage. You know there's enough money to pay your mortgage, and it's more sustainable long term. It's safer.
Yeah, that makes sense. So we're kind of early days in 2025 still. We're recording this getting towards the end of March. What are your plans for the company over the next 12 months?
Well, we're going to try to buy as many deals as we can, because the pricing is shaking out where in some cases you can name your price. There's a lot of deals that haven't traded, and sellers are saying, well, yeah, I should have sold 3-4 years ago, but you know what? I'm still making money. I'll take less. So there are plenty of opportunities out there if you look for them. We're also finding some sellers that think they have gold. Like I'm negotiating a contract now with a guy who's 78 years old who wants to handcuff me on what my future tax assessment is going to be on some of the individual parcels. And I'm like, I can't sign this contract. I'll go to another buyer. Is just make sure that if you're investing, you invest with people that have done this before. There's a lot of interesting things or troublesome things you can find out, especially when you deal with a property that maybe has 50% leased to one tenant. Is that a plus? Is it a minus? Sometimes it's a little of both, and how a lender might perceive that. Interest rates are coming in. The life insurance companies are getting pretty aggressive. The banks are back lending on their balance sheets. So there are a lot of opportunities out there. And I think that the Federal Reserve is probably going to sit on their hands this week and wait and see. But everybody's saying it's probably an 80 to a 90% chance towards the end of the year to see if not two rate cuts, which I think will help the market. Now, hopefully all this noise about tariffs will settle down the stock market and we'll all be happy.
So, Irwin, one of the things that you've talked about as far as talking to potential investors in your deals is explaining to them exactly what compounding cash flow is. So what does that actually mean, and how does that fit into what you guys are doing?
It's a simple formula, and I can give you an example using your body weight. If you compounded your body weight... Don't talk about
my body weight, man. We don't know each other that well.
I know, but if you took your body weight and compounded at 3% of the year for the next 7 or 10 years, you'd say it's an ugly number.
So it is an ugly number, man.
Yes,
I can relate to that.
I agree with you. For me too, at my age. But if your rents are growing, compounding at 3% a year, because it's 3% on top of it's 103 times 3, it keeps growing, and your expenses are pretty much triple net, then everything goes to the bottom line. So if your rents are compounding at 3% a year, and your property is appreciating it at, let's say, 4% a year, whatever it is, the end of the hold, you've doubled your money if you sell. But if you're not selling, then you're going to refinance and de-risk your investment by pulling out, 25 or 30% of your money, which you could, make another investment and could compound it by investing in something additional.
That makes a lot of sense. Awesome, Irwin. If people want to connect with you and find out more about what you're up to, where should they go?
Easiest place is Google. Put Irwin Boris in the search bar. You'll find me in a bunch of social media channels. You'll find me in a bunch of places where I speak. As far as industry panels, and you'll find my LinkedIn profile. It's got my calendar notice in there. You can make an appointment and chat for a half hour and tell me what you're seeing and what you're investing for and what you hope to get out of your investments in the future.
Awesome, Irwin. Thanks so much for being on the show again. Always good catching up.
Thank you so much, Dave. That's
great. All right, everybody, take care. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.